The most crucial company powering the whole AI revolution right now, they don't actually write a single line of code.
Right, yeah, not a single line.
And they don't even design the silicon chips that everyone is fighting over. Today, we're looking at a $1.68 billion invisible giant that, well, literally holds the digital world together. So welcome to this deep dive.
Glad to be here.
We are taking a stack of fresh financial documents today, specifically an April 27, 2026 earnings press release, plus the accompanying investor presentation from Amkor Technology. We source these via MarketBeat and Court, and our mission for you today is to basically strip away all that dense corporate reporting and decode what Amkor's massive Q1 2026 results are actually signaling.
Because it's a lot to sift through.
Exactly. But when you look closely, these numbers reveal the hidden physical backbone of the global tech economy. I mean, everything from that massive AI data center down to the premium smartphone sitting right there in your pocket.
It really is a profound shift in perspective. We're so conditioned to just interact with the polished software or like the sleek glass of a device. We just completely ignore the intense, heavy industrial processes required to actually make that magic function.
Oh, totally. It just feels like magic to us.
Right. But Amkor gives us a real-time, completely unfiltered look into the actual manufacturing pipeline of the entire tech sector.
But before we get to the billions of dollars flowing through that pipeline, we have to establish what Amkor is actually doing to earn it.
Yeah.
In the industry, they are known as an OSAT. That's Outsourced Semiconductor Assembly and Test.
Yeah, OSAT.
Amkor is the largest U.S.-headquartered OSAT in the world. But, assembly and test sounds a bit passive. It almost sounds like they are just putting a finished chip into a cardboard box and mailing it.
Right, like a fulfillment center or something.
Exactly. So let's look at it this way. Imagine a top-tier automotive company engineering the most powerful, complex V12 engine ever created. That engine is your raw silicon chip, right? Printed by a foundry.
Okay, I like this analogy.
But a raw V12 engine just sitting on a wooden workbench is entirely useless. I mean, they can't turn a wheel. It would overheat and just melt into slag in minutes if you actually tried to run it.
That is a brilliant way to frame it because it highlights the sheer necessity of the infrastructure around the chip. To get that raw horsepower to the road, you need a highly engineered chassis, you need a complex cooling system,
Right.
and a transmission that can handle all that sheer torque without just shattering into pieces.
And that is Amkor. They are the transmission, the cooling system, and the chassis for the digital age. They take that raw, incredibly fragile, microscopic silicon chip, and they build a highly specialized physical package around it.
Yeah, because it is so delicate at that stage.
Right. They manage the extreme heat the chip generates. They wire it up with just microscopic precision so it can instantly communicate with the memory. And they rigorously test it to ensure it won't fail when it's finally deployed in a server rack. Without that OSAT process, your multi-million-dollar AI chip design is just, well, an expensive, useless flake of silicon.
An expensive flake, exactly. And the demand for that specialized transmission and chassis engineering is surging right now in a way that honestly defies historical trends. Just looking at the Q1 2026 numbers, Amkor reported record first quarter revenue of $1.68 billion.
Up 27% year on year, which is wild.
What's fascinating here is the timing of that 27% growth. In the semiconductor industry, the first quarter is notoriously sluggish.
Right. It's like the post-holiday hangover.
Exactly. Consumer spending drops, enterprise companies are, still finalizing their annual budgets, and manufacturing typically cools off. So to see a 27% surge in a Q1 is a massive signal.
Wow.
It indicates an urgent structural demand across the tech sector that simply cannot afford to wait for the usual seasonal buying cycles.
It is dropping straight to their bottom line, too. I mean, they reported a net income of $83 million, an EPS of 33 cents, and an EBITDA of $285 million.
Which is huge.
Yeah, we are looking at an EBITDA margin of nearly 17%, which is remarkable considering the sheer volume of raw materials and heavy machinery required to just run this kind of business. Amkor's CEO, Kevin Engel, specifically noted that this record quarter was driven by broad-based end market demand.
Which is the absolute holy grail for a manufacturing company. You never want to rely on a single client or just one fleeting trend. Engel is signaling that the entire ecosystem is pulling simultaneously on their capacity.
But when a company historically known for seasonal dips posts a 27% Q1 surge, that isn't just a rounding error. That is a structural shift in who is buying.
Oh, absolutely.
So where exactly is this unexpected cash coming from? Let's break down that ecosystem a bit. Amkor segments their revenue into four distinct end markets.
Right, so the biggest piece of the pie is communications, and that represents 44% of their total revenue. And in Q1, this segment didn't just grow, it skyrocketed 42% year on year.
Wait, 42%? Which feels entirely counterintuitive, right? Especially given the broader macroeconomic headlines we see about inflation or consumer spending fatigue.
It does, yeah. Until you look at what specifically is driving it. The filings indicate this 42% leap is driven heavily by strong demand across premium tier smartphones.
Oh, okay. The really expensive ones.
Exactly. Consumers might be, holding back on buying a new TV or a mid-range laptop, but they are clearly still willing to finance the absolute highest-end mobile devices. And crucially for Amcor, those premium phones require significantly more advanced, expensive packaging to handle the increased camera processing and the new on-device AI features.
Okay, let's unpack this.
Why?
Because when we move to the next segment, computing, which is 21% of their revenue and grew 19% year on year, there's a glaring contradiction in the underlying sources.
Oh, for sure. It's right there in the text.
Right. On one hand, Amkor explicitly highlights record AI data center revenue as the big growth engine here. But in the very same bullet point, they note, quote, softness in PCs and laptops. How can the computing sector be booming and simultaneously soft?
If we connect this to the bigger picture, it perfectly illustrates the dual-track reality of the current tech economy. We are seeing a massive divergence between corporate infrastructure spending and everyday consumer hardware cycles.
So they're completely detached right now.
Basically, yeah. Right now, corporate investment in massive AI infrastructure, the server racks, the data centers, the specialized supercomputers required to train large language models, it's an absolute gold rush. Tech giants and cloud providers are buying every advanced package Amkor can produce.
But wait, isn't that incredibly risky for Amkor? I mean, if this 19% growth in computing is being propped up by just a handful of mega-cap tech companies building out AI data centers while billions of everyday consumers aren't upgrading their laptops, that sounds like a fragile bubble.
It's a fair point.
Like, what happens if those 5 or 6 massive cloud providers just decide, hey, we have enough servers for now?
That is the multi-billion-dollar question right there. And it's
Yeah.
a completely valid risk. But the counter-argument is that this is how major technological paradigm shifts always happen. You have to lay the railroad tracks before you can sell tickets for the train.
Okay, I see.
The mega caps are spending hundreds of billions laying the AI infrastructure tracks right now. That is masking the reality that the laptop on your kitchen table or, the standard desktop at a mid-size accounting firm simply doesn't need replacing yet.
Right, because we all bought new ones a few years ago.
Exactly. The consumer PC market had a massive boom recently, and those devices are still perfectly fine for checking email and browsing the web.
So Amkor's numbers are really just a mirror reflecting that split reality.
Precisely. They are catching the massive wave of corporate infrastructure spending, which is more than making up for the lull in consumer PC upgrades.
That dynamic is vital to keep in mind. Just rounding out the revenue breakdown, we have the automotive and industrial segment at 21% of revenue, which was up a very strong 28% year on year.
Right, driven by record advanced packaging revenue, because cars are basically data centers on wheels now.
Yeah, they really are. And finally, the consumer segment, so your wearables, smart home devices, gaming consoles, that makes up the final 14% of revenue, growing a modest 4% year on year.
And notice that every single one of those four markets grew. That reinforces Engel's point about broad-based demand. They aren't just an AI data center play. They're leverage across the entire digitized world.
But catching all this demand is only half the battle. Amkor doesn't have the luxury of just spinning up some new servers in the cloud to meet demand. They have to physically build the capacity to fulfill these orders.
Yes. Concrete, steel, huge logistics.
Exactly, requiring massive capital and intensely complex supply chains.
And they are executing on some massive long-term strategies to ensure they have that capacity. Their investor presentation highlights some really serious construction milestones, like they are actively building a new advanced manufacturing campus in Arizona.
Bringing packaging stateside.
Yes, exactly. And they have a new test building in Korea that is on track to be completed by the end of this year. Furthermore, they're preparing to ramp up their HDFO data center CPU program in the second quarter.
HDFO, high-density fan-out. For anyone outside of semiconductor engineering, that just sounds like complete alphabet soup.
It really does.
But understanding what a fan-out actually does is critical to understanding why AI is even possible right now.
It really is. I mean, for decades, the semiconductor industry relied on Moore's law, just keep shrinking the transistors and packing more of them onto a single piece of silicon. But we are hitting the physical limits of the universe.
You can't go smaller than an atom.
Right. You can only shrink a transistor so far before quantum mechanics literally ruins the party.
So instead of trying to make one massive, incredibly complex chip that is prone to manufacturing defects, companies are designing smaller, specialized chips, right? Chiplet.
Exactly. Chiplets. You print a bunch of smaller chips, maybe one handles processing, another handles memory, and you package them tightly together. But here's the problem. How do you get those separate chips to communicate with each other fast enough that they act like one single brain?
Enter high-density fan-out.
Right. HDFO is a microscopic engineering marvel.
Oh.
The connections on a modern silicon chip are incredibly dense. You can't just wire them straight down into the main circuit board. There just isn't enough physical space for all those wires.
So Amkor effectively fans out those connections.
Yes. They embed the silicon chip into a specialized molding compound, and then they build microscopic redistribution layers. It's essentially a multi-level highway system built at the nanometer scale that spreads those ultra-dense connections out over a wider surface area. This allows for massive high-bandwidth communication between the processor and its memory. Without HDFO, these AI chips would be completely bottlenecked. They would process information faster than they could even retrieve it from memory.
It's the ultimate transmission system for that V12 engine we talked about earlier. But reading through these documents, building these microscopic highways is fraught with global bottlenecks.
Oh, definitely.
Amkor dedicates a significant portion of their industry backdrop to the constraints they are actively managing right now. They explicitly call out advanced silicon, memory, and advanced substrates.
And honestly, the substrate constraint is arguably the most critical operational hurdle they face. I could talk about substrates all day.
Uh-huh. Okay, I knew you'd get excited about substrates. Why are substrates such a persistent headache for the entire industry?
Because an advanced substrate isn't just a piece of plastic. It is the physical translator between two entirely different scales of physics.
What do you mean?
Well, the wiring on the silicon chip is measured in nanometers, billionths of a meter. But the wiring on the green fiberglass motherboard of a server is measured in millimeters. The substrate sits between them, stepping down the density from the microscopic world to the macroscopic world.
Okay, that makes sense.
Furthermore, silicon and fiberglass expand at different rates when they get hot. And an AI chip generates an immense amount of heat.
Right.
If you attach the silicon directly to the motherboard, the different expansion rates would literally physically rip the chip apart. So the substrate acts as a thermal buffer, absorbing that stress.
So manufacturing these advanced substrates requires balancing exotic materials, microscopic precision, and intense thermal engineering.
Yes. And the factories that produce these substrates take years to build and billions of dollars to outfit. When demand for AI servers spikes, you can't just order more substrates overnight. It is a massive, multi-year capacity bottleneck.
Which translates directly to your daily life as the listener. I mean, if your company is suddenly told there's a 6-month lead time to get new enterprise servers, or if the price of a premium smartphone creeps up another $100, you aren't just paying for the brand name or the software.
No, not at all.
You are feeling the downstream ripple effect of a global shortage in advanced substrates and HDFO packaging capacity.
That is the physical reality of the digital economy right there. And materials aren't the only constraints Amkor has to manage. The filings also explicitly note that they are actively navigating export controls, shifting trade policies, and having to work closely with their customers to offset cost increases across the supply chain.
And from a purely operational standpoint, navigating international trade policies is a logistical tightrope.
It really is.
If a new export control restricts a certain piece of testing equipment from crossing a specific border, or if a tariff suddenly increases the cost of importing raw materials to their factories in Korea or Vietnam, Amkor has to immediately pivot.
They don't have a choice.
Exactly. They impartially have to redesign their logistics networks, find alternative suppliers, or negotiate with their clients to share that unexpected cost burden. It is a constant recalibration of time and money.
It forces them to be incredibly agile. They can't just build one factory and hope for the best. They have to geographically diversify their manufacturing, like we see with their new Arizona campus, to ensure a localized policy shift doesn't bring their entire global output to a halt.
All of which requires an astronomical amount of cash. I mean, they have record demand, they are building new multi-billion-dollar campuses across the globe, and they are navigating incredibly tight supply chains. Which brings us to the ultimate question of corporate survival.
The financials.
Yes, the semiconductor industry is famous for its brutal cyclical nature, right? Massive boom and bust cycles. Does Amkor actually have the financial bedrock to fund this expansion without overextending themselves if the market suddenly turns?
Well, based on their Q1 balance sheet, they are operating from a fortress position. Let's look at the liquidity. They ended the quarter with $1.8 billion in cash and short-term investments.
Wow.
And if you factor in their available credit lines, their total liquidity sits at $2.9 billion.
Now, that is a massive safety net. But what about the other side of the ledger? Building an advanced packaging facility in Arizona isn't exactly cheap.
No, it certainly isn't. They do carry $1.4 billion in total debt. However, you don't evaluate corporate debt in a vacuum. You look at it relative to the company's earning power. Amkor's debt-to-EBITDA ratio is currently sitting at a very healthy 1.1x.
Meaning their total debt is only slightly more than what they generate in core operating earnings in a single year.
Right. If this were a software company with no physical assets, maybe you'd scrutinize that debt more closely. But for a capital-intensive, heavy manufacturing company that has to purchase $100 million lithography and testing machines, carrying a 1.1x leverage ratio is exceptionally conservative. Oh yeah. It means they have immense borrowing power left if they ever needed it.
And they are going to need every ounce of that financial muscle because their capital expenditure guidance, their CapEx, so the money earmarked to actually buy the new equipment and pour the concrete for these facilities, is set at a staggering $2.5 billion to $3.0 billion for the full year of 2026.
Up to $3 billion reinvested directly into their physical capabilities in a single year. That is a definitive bet on the sustained growth of advanced packaging. And their short-term guidance backs up that confidence. They're projecting Q2 2026 net sales to hit between $1.75 billion and $1.85 billion, with growth margins holding steady.
But here's where it gets really interesting for me. On April 23, 2026, just days before they released these earnings, Amkor's board of directors authorized a new $300 million stock repurchase program while also maintaining their quarterly dividend payout.
Yeah, the buyback.
Let's push on that logic for a second. Why would a company aggressively buy back $300 million of its own stock while simultaneously committing to spend up to $3 billion on new equipment? Doesn't that seem contradictory?
On the surface, yeah.
I mean, if you need $3 billion to build factories, shouldn't you hoard every single dollar of your cash rather than giving it back to shareholders?
It seems counterintuitive until you look at it through the lens of capital allocation and market signaling. In the financial world, that specific combination, massive capex alongside a fresh stock buyback, sends a very loud dual message to the market.
Okay, how so?
By committing $3 billion to capex, management is telling their clients and competitors, we see so much locked-in future demand for AI and premium mobile that we must expand our physical footprint immediately.
Right.
But by simultaneously executing a $300 million buyback, they are telling Wall Street, our free cash flow is so robust and our balance sheet is so secure that we can easily fund this multi-billion-dollar expansion internally and still have hundreds of millions of dollars left over.
It essentially removes the fear of dilution. They are saying, we aren't going to need to issue new shares and dilute your ownership just to pay for our new Arizona campus.
Exactly. Furthermore, a buyback implies that the executive team believes their own stock is currently undervalued by the market. It is the ultimate display of corporate confidence. They believe the returns they will generate from holding their own stock are just as compelling as the returns they will get from building a new test facility in Korea.
So what does this all mean for you? Why should you, as a listener, care about the intricacies of an OSAT's balance sheet or their CapEx guidance?
Because Amkor is the ultimate reality check for the entire tech sector. We are constantly bombarded with endless hype about the software side of the next technological revolution. You know, generative AI models, autonomous vehicle fleets, next-generation spatial computing.
It's all we hear about.
But all of that software requires vast amounts of physical hardware to run. You can't execute an AI model on a concept. You need silicon, substrates, and high-density fan-out packaging. Amkor's massive 27% growth, their $3 billion reinvestment plan, and their fortress balance sheet prove that the physical hardware side of this revolution is rapidly being built right now.
It's real.
Yes. The billions of dollars in venture capital hype are translating into billions of dollars of physical concrete and silicon.
It just grounds the entire digital narrative in physical reality. To recap our journey today, we started by uncovering the invisible nature of the OSAT industry, the high-tech engineers building the transmission and chassis that allow modern chips to actually function.
Right.
We dissected Amkor's record-breaking $1.68 billion Q1 quarter, revealing the intense, urgent demand for premium smartphones and AI data centers, which is currently masking the stagnation in consumer PC sales.
That dual-track reality.
Exactly. We explored the microscopic complexities of high-density fan-out and the global bottleneck of advanced substrates. And finally, we saw how a highly disciplined balance sheet is allowing Amkor to confidently reinvest $3 billion into the physical infrastructure of tomorrow.
But this raises an important question for you to mull over as you look at the devices surrounding you. We established that this massive 27% growth surge is being heavily propped up by corporate AI data center spending and high-end smartphone upgrades.
Right.
What happens in 18 months when that initial massive corporate infrastructure build-out is finally completed? When all those hyperscale data centers are finally built, wired, and humming?
That's a scary thought.
Will everyday consumer products like those currently soft PC and laptop sales catch up and drive the next wave of demand? Or is this massive global engine destined to face another one of the semiconductor industry's infamous brutal downturns once the megacaps just stop buying?
It is a precarious balancing act, and one that determines the cost and availability of every single digital device we rely on. Thank you so much for joining us on this deep dive. Keep asking questions, and remember to always look beneath the polished glass of the tech you use every day, because there is an entire invisible world of heavy industry fighting to build the future.